Okay, what's up traders? What's up tycoons? Super excited for today's video. Going to cover a lot. All right, we're going to go over a few things. I'm going to try to make it as quick as possible. So that way I don't waste any of you guys' time and we just get right into the data. We're seeing lots of strange things in the market right now. All right, we're seeing yields rising, we're seeing the dollar rising, and we're seeing tech rising. We'll dive into this chart a little bit more. All right, we're going to take a look at the overall market as a whole, and we can see that the stock market has been led by tech. Okay. Tech has been leading the way compared to all of the other sectors. Consumer staples was actually down the most. We're going to take a look at them. All right. And in tech, we can see that it's semiconductors really leading the way there. All right. When it comes to the industry trends, and the top stock gainers, okay, have been Nvidia, Microsoft, AVGO, which is Broadcom, AMD, and Adobe. Now, we've had some excellent trades on many of these: Adobe, AMD, Nvidia, Google, countless others. Tech has really been rallying. And it's a little bit harder to justify buying into some of the tech at these current valuations and these current prices. And there could be some warning signs there, right? If we take a look at smart money versus dumb money, okay, now this is what they're typically known as. We have HYG, which is a high yield corporate bond ETF, and then we have the SPX, the stock market. All right, HYG, the bond market, they usually refer to that as smart money, and then they'll refer to retail and the stock market as dumb money. There's a divergence right here, okay? We'll break down that a little bit more as well. We'll take a look, and this whole rally has really been fueled by earnings, okay? So we're going to dive into that some more, break that down. And one big important thing that I mentioned a while, right? Back since October, November, really since September, if you've been following the channel, I mentioned the whole midterm election cycle. And here we're going to take a look at the pre-election year and aggregate cycle. That's some really interesting data as well. All right. Now, I mentioned staples. Okay. We're also going to dive into staples a little bit more. All right. There are some signals here that we don't see only about 4% of the time. We'll dive into those. Okay. And we'll also break down the staples chart, XLP. And the big question is it ready for possibly the next move up, right? We'll also take a look at TLT. We have double bottom bounce and a engulfing candlestick here on the daily pattern or on the daily chart. Let me know you guys' thoughts down below on TLT. Do you think that the pain is over? Do you think it's going to continue going down? Do you think that we've put in a bottom, it's going to start going back up again? I'm interested to hear you guys' thoughts. All right, we do have the debt ceiling seeming to be resolved right now. And that's going to be a big factor, and I think affect the bond market in things like TLT as well as the stock market, pretty importantly. Okay. And we could see a lot of volatility in this next upcoming week. Now, full disclaimer, the content provided on this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involves significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer before moving forward, and we'll go ahead and get right into it. So as I mentioned, we're seeing some strange times right now, okay? We literally have yields rising, we have the dollar rising, and we have tech rising as well, okay? So if we take a look right here, we have the 2-year treasury yield, we have the 10-year treasury yield, then we have the 20-year treasury yield, and we have QQQ, which is the tech sector, or the NASDAQ 100, and then we have DXY, the US dollar index. All right, all of these are positive, right? And they've all been rallying here recently, all relatively putting in a bottom right around the same time. Okay, back in early April. Okay, and we've seen a strong move up in many of these, and that's confusing times, right? I mean, if we think about 2022, the whole narrative there was, oh well, yields are going up, so tech is going to be going down. I mean, that was kind of like the whole basis, right? Oh, treasury yields going up, interest rates going up, that's bearish for tech, right? Oh, the dollar going up, that's bearish for tech. Right now, we're not seeing that, right? We're seeing all of them rising. And it's just something really interesting, and it's got a lot of traders, a little bit confused, right? And it's made it very difficult, in my opinion, to navigate the market. And you just have to be more precise, right? When things aren't clear, when things aren't certain, wait for some clarity. Okay, cash is a position, so you don't always have to trade just because something is going on, right? And You know, especially if things are confusing, you don't need to have a position every single day or always be in something. You can wait. Okay, guys, cash is a position. And rather than just, you know, throwing your money into something and not really knowing what you're going for, you know, you can just wait until things are more clear, right? Now, I've been, you know, saying that, hey, we could be due for a big stock market drop anytime soon. And the whole reason I've been saying that is pretty much because of this, right? Because we're seeing the yields rising, right? We're seeing the dollar rising. And in 2022, that led to bearishness in stocks, right? So, you know, I haven't really been shorting the market here, honestly. You know, I've been playing things like TLT. I've been going long on some day trades on some tech or other things like that. And so, you know, just because someone's on YouTube saying, hey, you know, there's warning signs and things have to crash, okay, you know, that you shouldn't buy into that or just short stuff just solely because of that. Yes, the equity markets aren't really down and we're seeing tech rallying very much, but when it comes to, you know, the prediction of yields rising and the dollar rising, those are all still up too, right? And those are all tradable things as well, right? You can trade, you know, treasuries, right? You can trade the US dollar and different things like that. So, you know, go with what seems clearer to you and what's best for you. That way, you know, you don't always have to suffer, right? Just because you know, you see one thing happening, you think that something else has to happen. That's not always the case, right? And this is a really good example of that. Now, as I mentioned, we're looking at the industry trends. NVIDIA, Microsoft, Broadcom, AMD, Adobe, all of those have been some of the top gainers over the last week in the market. And as I mentioned before, tech is really just leading the way, okay? And specifically semiconductors, all right? Semiconductors have been blasting off largely in part, okay, due to NVIDIA and their, I mean, NVIDIA just did something that, you know, a lot of people have not really seen in the market before, right? Overnight, just going up hundreds of billions of dollars in market cap. I mean, absolutely insane. All right, if we look at Staples right here, Staples underperforming the most, okay? Out of all of the sectors in the stock market, we're seeing Staples, you know, really bleeding there, right? I mentioned the smart money versus dumb money warning. And, you know, this is, you know, one of those times where, you know, if you've been trying to short the market because you see this divergence here, it's been very difficult, right? We're stair stepping up, right? We're making a high, higher high, higher high, higher highs. And then we're making higher lows, right? Continuously making these higher lows here. And meanwhile, HYG is going down, okay? Making lower highs and lower lows. Now, the reason that this is a warning, okay, is because take a look, these usually trade together with each other, right? They usually follow each other, you know, pretty much the same. All right. And what we're seeing now is this divergence. So the big question is HYG and the high yield corporate bond, okay, smart money in a sense, are they lagging behind? And now is it time for HYG to play catch up, okay, to the S&P 500? Or is this a warning that, hey, you know what? Smart money is actually going down right now, okay? And perhaps that's a warning sign that stocks and dumb money is about to see a drop in price, right? That's kind of the whole basis of it, okay? Is we're seeing this divergence and, you know, one of these is going to break. It's either going to be HYG start going back up, okay, and try to catch up to the stock market, or we're going to see the stock market drop down and try to catch up to HYG. We can't predict the future, but we can try to, you know, position ourselves the best way, you know, to stay hedged, right? Or stay ready in case one of these moves happen, right? It's a little bit hard to go extremely long in the stock market if you're seeing some of these signals. Now, we do have the debt ceiling. Okay, that seems to be getting resolved over this weekend, over this holiday weekend. And, you know, after Memorial Day, the stock market is closed and we could see people ready to drop some money, drop some bands in the stock market, right? They come back, they had a good Memorial weekend. The debt ceiling, you know, crisis seems to be resolved. And, you know, we could see money start to flow back into the stock market and continue pushing things up higher, right? At the time of this recording, it's Sunday night and futures gapped up, right? Futures gapped up and we're starting to see, you know, that money start to come in, and it'll be really interesting to see if that lasts, you know, back into when the market opens on Tuesday, right? Now let's look at our next graph right here. And this rally has largely been fueled by earnings. I mentioned NVIDIA's earnings, okay? But if you take a look, the consensus EPS stopped falling after negative 13% since the June 2022 peak. Okay. And so you have the historical average right here. You have 2023. And, when you look at every sector right here beating except utilities, this is what's really got my attention right now, guys. Is that screaming recession to you, that every sector is beating except the utility sector? Typically, you would think utilities would be doing good in a recessionary environment, and we're actually just not seeing that right now. Okay, that's something that's pretty odd. And really has a lot of my attention. It has me questioning, what are the real odds of this recession coming, right? Now, there's plenty of warning signs, that a recession could be coming, but you have to look at all of the data, right? And this is one standpoint right here where people are wondering, how is the market going higher? This doesn't really make sense. Well, the rally has been fueled by earnings. Okay, people priced in a very bad earnings for 2023, Q1, Q2, even Q3, and now we're starting to get those Q1 results, and they're not as bad as the market priced in. And we're seeing that every sector beat except utilities, right? And EPS is tracking a 5% beat, which is double the typical beat. All right. So, earnings has a large part to do with this. Now, when we look at the S&P 500 pre-election year and aggregate cycle seasonal pattern, okay, basically over the last like 70 years, we have the black line right here is going to be all pre-election years. The blue line is first term pre-election years. The green line is pre-election after the midterm bear. And the red line is the STA aggregate cycle. And in purple here, we have 2023. Now, one thing that I mentioned before in the past is that the stock market has been green historically 100% of the time on a after midterm elections from a 6-month to a 1-year basis. Okay. So 6 months after midterm elections, the stock market's been green 100% of the time. All right. When midterms happened, I actually went long on S&P 500 leap options. Okay. And I sold those a while ago, a couple months ago. I probably sold a little bit early looking back in hindsight. But, I wasn't sure if that rally was going to continue forever. And we did end up seeing a sharp pullback, but now we're retesting those same highs. Okay. So, keep that in mind, okay, that possibly by next October and next November, if the historical data for the midterm election cycle is going to be accurate, the stock market is going to be green, okay, and it's going to be up from what it was last October, last November. Now, we've already seen a really big rally in the market so far, so, the market could give back some gains and then just flatten out a little bit and still be positive compared to those October lows. Now, when we look at this pre-election year and aggregate cycle seasonal pattern, okay, what we're seeing here is that we could be getting up for a point where things start to, still go up a little bit, but maybe just not as fast and not as much, right? If you look at all the pre-election years, okay, we start to rise and then we pull back down. And if you take a look from where it starts, it really, ends right around the same price levels, right? Let me draw a little straight line here for you guys so it's a little bit clearer for you to see, okay? And if we take a look at where it ends, okay, and where we begin, it's right around the same time period with the market only up just a small amount from about May, okay, to November. And this kind of correlates with a little bit of that sell in May and go away. But if you take a look at it from a trading standpoint and from a trader standpoint, what we're seeing here is higher highs, right? So we have the high here, we have the higher high here, okay? And then we have the higher high here. So there still could potentially be upside around this July to August time period. We could see new highs in the market again, right? And the S&P 500 has really been range bound, okay? Has not been able to break out to that 4,300 level and above 4,300. And perhaps if this bullishness continues, especially with the debt ceiling, seeming to be resolved, maybe we can see new highs in the S&P 500 this summer, right? So that's definitely a possibility. Of course, you have to be mindful of, all of these warning signals that we're seeing. And, it doesn't just have to be tech. Now, tech has a large weight factor in the market. All right. But when you take a look at consumer staples, they are oversold. Okay. And we're going to break down, that historically. But when you look at where we're at right now, this has only happened about 4% of the time. Okay, when this percentage of S&P 500 consumer staple stocks are oversold on the 14-day stochastic. All right, this has only happened about 4% of the time, and the annualized return, guys, is 45%. Okay, so if this data is going to be accurate, there is the chance we could see 45% returns from now in the staples sector of the stock market. Okay, now that's not a prediction or a guarantee, that's just data. Okay, and you can use that data to help make some of your own investment decisions, right? Maybe you don't want to chase the highs right now in tech, and maybe you want to look for areas that are oversold in the market. Okay, not to say that they can't go lower. Now, if you take a look here, when staples are after over 60% of staple stocks are oversold, but less than 40% of S&P 500 stocks are oversold, you can see the performance, okay? And the median, okay, 12 months later is nice, guys. I mean, all of the data here looks nice, okay? Honestly, to me, it looks really, really nice. So, there is the chance that, staples could be a good time to get into based off of this data purely alone, right? Now, when we look at the chart, to me, it does look like it has potential here, right? One of the reasons is we just had a fall off of the triple top. Now, triple tops to me are something that I like to start looking at because the more times you test a resistance area and a level, the weaker it's going to get. So it's been a very strong level. There's definitely no doubt about that. But if we take a look here, essentially we're also putting in slightly higher highs, right? We have a high here, slightly higher high here, and then we have a slightly higher high here. Now, overall, it's pretty much been a triple top. But, if we come back and retest this zone, are the same amount of sellers going to be there at these points that were there each time? And is that supply imbalance going to continue pushing price down? Or potentially, could we get the breakout after so many rejections, right? We take a look here and we just draw some simple arrows. We see move down, right? Move down, right? Move down, right? If we come back up, maybe now is finally the time when we get the breakout on consumer staples. Okay. So I'm definitely watching staples right now. 72.34 is going to be the major support level down below. We're currently battling 73.52 as resistance. Above there, we have 74.35 and 75.18. All right, these are going to be the four key levels that I'm watching right now currently. And if we break through the 72.34, we do have a nice demand zone here, all right, at about that 70.50 to about 71.50 price range. That's been a good demand zone really since, November of last year when that zone was established. And we retested it in late January of 2023. And then over here in March, we came back and retested that area again. And we've seen lots of demand, and buyers stepping in at that 70.50 to about 71.50 price range on XLP. So that will definitely have my attention if we do come back down and break in here. Now, if we break through this zone, okay, bearish price targets are going to be 69.19, 68.22, and 66.84. Now, one thing really in particular, we mentioned them being oversold on this chart, and we take a look at the data and the annualized returns. Just from some technical analysis standpoints, we're seeing very similar things. Okay, take a look here, and I'm gonna, show you guys some really interesting signals. Okay, I try to keep the TA as simple as I can in these videos, especially for beginners. If there's any beginners watching. So, two of the easiest things to start learning to use and combine in conjunction with each other are going to be the MACD and the RSI. Now, the MACD is your moving average convergence divergence. Sounds pretty complicated, but it's actually pretty simple to use. You want to pay attention to this red line, and when it crosses down below, that is what's known as an exit signal. When it crosses below the yellow line, we get that exit signal. Boom, big move down right there. And really, we see this multiple times, right? We see the big move down. Over here, we also get an exit signal, big move down, okay? Over here, exit signal again, and we see big move down. Now you start combining this with some other things, right? Over here, we get a double top and we see the MACD sell signal. Over here, we get that triple top, see the MACD sell signal. So now you could say you have two sell signals based off of, a triple top candlestick pattern and also the MACD. Now you start combining that with your RSI. This is your relative strength index. It's going to measure the relative strength of a stock at the given prices that you're looking at. Okay. And what do we see here? This dotted line here is 70. This is the technical definition of overbought. So let's start combining all of these things together now. We see that the stock becomes overbought. All right, generally you don't want to buy a stock when it's at overbought conditions. The likelihood of a pullback is much greater. All right, very shortly afterwards, we're at these overbought levels. What do we see? That MACD crossover right after, okay? Same thing over here, overbought conditions. Very shortly afterwards, MACD sell signal, double top, see a pullback. Okay, over here, same thing, overbought conditions, MACD crossover to the downside, triple top, pullback. Right. So, it's very simple stuff that, is beginner friendly. Okay. That doesn't take, a rocket scientist to do. Now, over here, it also works for buy signals. Okay. Take a look at the last time we were oversold, which is this dotted line right here, 30. When you're below 30 on the RSI, that's your technical definition of oversold. We get a MACD crossover to the upside where the red line crosses above the yellow line. And that's an entry signal. And we see a strong move to the upside, right? Take a look right now. We are oversold. And now the big question is the MACD going to potentially cross over to the upside and give us a buy signal, right? That is what ultimately I'm looking for right now, is to see, can we start to gather some momentum and can we get a MACD crossover to the upside? If that's possible, after these oversold conditions, then I may look at going long on XLP via some option strategies. I may sell some put credit spreads, or maybe just sell some cash secured puts. Really just depends on the strategy that I want to go with and the risk profile. Okay, there's many different ways to trade things besides just buying and selling stock. So you can watch plenty of my videos. I have lots of videos and tutorials on how to trade options and the different strategies that you can use on those. TLT, okay. In my last TLT video, I mentioned that we had a little double bottom here, right? So, and I was excluding this abandoned baby right here that we had, but here we have, this bottom over here. We came down, tested that bottom, and we also have an engulfing candlestick now. So will this cause a further bounce? If you take a look, we broke this very long-term trend line here. And could we potentially be looking for the retest of this trend line for a move down? Or will this just be a massive look below and fail, right? Where we look below, sellers have the full opportunity now to really push things lower and fill this gap down here to 95. If this turns into a look below and fail, that is going to be a bullish sign. And the reason being is because bears have the full opportunity here now to really push price lower. And if they don't take advantage of that opportunity, it's going to show that the bears are not actually in control, that the bulls are actually in control. Okay, something else that's kind of significant here is if we take a look, we're essentially filling half of this gap down. Now, I've mentioned before, a half gap fill is either going to be bullish or bearish, depending on which direction the gap is filling, right? So when you're coming down and you only fill half of a gap to the downside, and you start to rally outside of it, that potentially is a bullish signal. Okay. And we're right there at that point where we're bouncing right at the halfway point. Now, we really need to see some follow through though. Okay. Because if we just come back down and fill the rest of this gap sometime soon, within the next week, right, that's not really going to be that signal. Okay. What we're looking to see is if, this double bottom and this engulfing and this half gap fill can lead us to get back up to this 102.88 level and potentially even fill the gap up we have just above 104 on TLT, right? Now, something also pretty significant is we're coming up and to retest this trend line here on the RSI. We've had this bullish divergence trend line that we bounced off of many times, okay? It initially formed over here off of these lower lows, all right? And then we had higher lows on the RSI. That's bullish divergence. And you can see we came down, tested it, bounced again over here. All right, we came down, tested it, bounced again over here. All right, we came down, tested it, bounced again over here. And ultimately, we finally broke below that trend line, and we broke this trend line here on the chart as well. And now, we're coming back up. If we reject this trend line, there's a strong chance that TLT is going to end up going back down again, right? Now, also we're going to be looking at the MACD. The big question over here in, more of the beginning of May was, were we about to get a curl back up to the upside as TLT curled down, and then it started to really trade in conjunction with this yellow line here, and we weren't sure, was it going to curl up or was it going to curl to the downside? It ended up curling back to the downside. And so now the big question is this thing starting to get ready to curl back up to the upside, right? Last time that we were right around these levels, we did end up getting a MACD buy signal, right? We just draw a straight line over from the last time that MACD was right around these levels. Very shortly afterwards, we ended up getting that buy signal. So, real interested to hear you guys' thoughts on TLT. What do you think about TLT? What do you think about the stock market right now? Are you still bullish on tech? Do you think tech can continue running and continue this massive rally? Do you think it's a big bubble right now, a big bull trap, a big bear trap? Or what do you think about the staples, right? Do the staples look good to you? What signals are you seeing on the charts? What signals are you seeing in the data? I'd love to hear you guys' thoughts. As always, appreciate you guys for watching. Smash that like button and subscribe for more.